Well, good morning. My name's Joanne Trelagan and I'm the Marketing Manager at AFTA. I'm really pleased to welcome you to this morning's webinar. It has been such a popular topic that we've decided to run a second webinar on understanding the recent changes to electronic payments and credit card surcharging. Just a few housekeeping notes before I hand you over to Dean Long, who is our National Manager for Strategy and Policy. This session is being recorded and the presentation will be available on our website under the Webinar Navigation tab at afta.com.au. We had a few small technical issues at the end of the webinar we ran last time. So this recording will replace that one so that we have an end-to-end coverage on the topic. You are all on mute, but you will have the opportunity to submit questions at the end of the webinar, and I'll be jumping back in and helping Dean facilitate those. You will see that you can ask these questions via your control panel. There's a little question box so you can simply type it in. We'll be able to see the question, read it out for everybody to hear and answer those as best we can. Before we dive into the webinar, I just want to give our ATAS accredited participants an opportunity to participate in some cooperative marketing that we are doing with Fairfax in the senior newspaper. This is a monthly newspaper that goes out and is specifically targeted to those 55 and over. We are doing it in conjunction with Fairfax, where our ATAS participants' advertising will appear inside a special ATAS feature talking about the benefits of booking with an accredited agent. You receive discounted advertising whether you do 1 month, 2 months or 3 months, and we're doing it across September and October and November this year. And you actually can reach more than 1.1 million consumers, and research actually shows that 69% of the people that read the newspaper will actually look to the senior traveller for travel advice. And more than 70% of those readers will actually travel in the next 12 months. So it's a really targeted audience. If that's something that you're interested in, you can email me at jo@afta.com.au, or the information is all available on our website. I'm now going to hand you over to Dean, and he's going to take you through the very interesting topic of electronic payments and credit card surcharging.
Well, thanks, Joe, and look, great to have so many people on the line today. It may not be the most interesting subject, but it is one of the ones that your customers will be looking for some changes over the next 12 months, and hoping that this webinar will give you a good overview of the changes and what we've been doing to facilitate a good outcome for agents. So I just want to point out that this webinar is really going to have two very distinct sections. We have a varying mix of knowledge of payments on the call today. So we're going to have a quick introduction about what we're going to cover. We're going to go through some key terms that the financial services sector use, have a quick discussion about why the changes have been made by the government, what's going to change with your merchant service fee, what's changing in the in the surcharging space, when will you be affected because there is a transition arrangement put in place, and what's next for what AFTA will be able to help you in this transition period. So as Joe mentioned, you do have a question toolbox just there. I do encourage you to submit questions throughout the presentation. I'll do my best to answer those on those individual pages. For the questions I don't get to, don't stress, I will cover them at the end, and we will have plenty of time for questions at the end of this webinar. So a little bit about me. I joined AFTA in May 2014, and this was after being the Senior Advisor in the New South Wales Government for Tourism and Major Events. I'd also spent a number of years working for the then Tourism New South Wales, and some of you may now know as Destination New South Wales. Some of the key outcomes I was responsible for in the previous roles was the establishment of Destination New South Wales and also establishing and securing some of those major events which you may have heard of, such as the opening round of Major League Baseball and also the return premiere of The Lion King. I'm also a current advisor to the Western Sydney University's Bachelor of Tourism, and that's part of my role here at AFTA. And I'm also responsible for all public policy matters, including submissions to government. All of our submissions are available on afta.com.au. If you wish to have a look at them or you have any further questions, please reach out. Importantly, especially considering today's topic, I've been leading the industry's input into the changes of electronic payments and the changes to the way merchants are allowed to surcharge. That's enough about me. Let's get into the meat of what we're actually going to talk about. So what is an electronic payment? An electronic payment is everything you see there. It's a credit card, it's a debit card, it's a prepaid card, it's PayPal, it's BPay. It's really any form of payment that occurs across an electronic means outside of cheque or outside of cash. So why is this important? It's really important because 89% of consumers who are purchasing travel are choosing to pay via an electronic means. Only 11% in today's world are choosing to pay via cash. And this is directly for travel. This is a travel-related stat that's come out of some research which we've done here at AFTA. So 41% of people are paying via direct deposit or debit, 38% are paying using a MasterCard or Visa, and 10% are paying via Amex. So we're just going to jump into what some key terms are, and this is really important because just as we as travel agents have our own language, so for example, flights from MEL to LAX on QF ticketed and S-Class, financial institutions also have their own language. So these are the 5 main terms which some attendees may not be aware of, and I just want to give a quick rundown because they're fundamental terms of what the financial services sector use when they're talking about electronic payments. So let's kick off. What's an acquirer? Typically, this will be the bank you have your business account with. They'll provide your business with a merchant terminal, which is used to swipe a physical card, or a web portal where your customer can provide you with their card details to process the payment. Now I point out American Express here because American Express is a little bit different to MasterCard and Visa. Where MasterCard and Visa use a third-party company to process, such as a bank, American Express complete this process in-house. So they issue a card and they're also an acquirer. Just a small differential, but that's a very important difference to know as we move through this webinar. So card schemes. Card schemes are the brands we know, but for the majority of the people, there's limited understanding of the role that they play within the payment process. Quite simply, card schemes provide the network that allow your customers to pay you and for you to charge your customer. It's the back-end system that makes everything work. The other important term here that I want to point out is when I'm referring to the term card type, that refers to what the card is actually defined as. So is it a credit card? Is it a debit card? Is it a prepaid card? So just to rehash that quickly, card schemes are the back-end systems that allow process to payments. Card type refers to if it's a credit, debit or prepaid card. Okay, interchange fees. These are the most technical aspects of electronic payments. However, simply, they are just the fees that fund the global payment system. They are the fees that are charged in the back end to make things work. So an interchange fee is the charge you pay to the card issuer, and the card issuer is the bank or other financial institution that supplied the card to your customer. Now, interchange fees can vary on a number of factors, including the brand of the card. Is it a MasterCard? Is it a Visa? Where the card was issued? Was it an Australian issued card? Was it an internationally issued card? How the transaction was processed. Was it a tap and go? Did you as the merchant swipe the card? Did the customer insert it into the terminal, or was it used online? And a really good example of how these fees differentiate is that if you have a tap and go within your travel agency business, so you have a tap, someone can tap their card and that process is paid. Now it doesn't matter what card they use, it could be a debit, it could be prepaid. Every time that is transacted, it is transacted at the higher interchange fee. It's charged at a credit card rate. So probably a little hint going forward is that if someone is wanting to pay via debit, don't let them tap and go. Make sure they insert it into the terminal or swipe it, or use the online portal that you may have for your business. So another important part of the interchange fees is that card product type. So to add an extra level of complication to the issue is that corporate cards are also included, and they have a higher fee, as do premium cards. So some people may have a Platinum MasterCard or a Platinum Visa, and those cards cost more for you to process as a merchant. And so all of these items have an impact on what the interchange fees are, and importantly, what it costs you as a merchant to process those payments. An important distinction here is that American Express does not have interchange fees. For those of you that do accept American Express, you'll know that you have to negotiate with American Express, the corporation, to establish what your merchant rate is. Let's just spend a minute now just to look at how the interchange fees work in practice in this little visual formation. So your customer comes in, they make a purchase for $100. You as the merchant process that payment by swiping or by entering those details electronically. You then send that message off to your acquirer, so your financial institution in most cases, and that uses either a MasterCard or Visa network. The card network then takes a fee of that within the interchange, and that's called the interchange fees, and that processes that whole payment. And through that system, that then goes to the card issuer's institution, and that's how you as the customer get the charge on your credit card. And so those fees make sure that that back-end system works seamlessly, and make sure that the customer is charged the right amount, and also funds a few other little things which we'll have a chat about later in this webinar. For those travel agents that are regularly reviewing the statement provided to you from your acquirer, and I know how much of a great read that can be, you may be aware that there is a line item called MSF, or Merchant Service Fee. And that's a really important code, because what that is the all-up fee that you are charged for your right to have a merchant terminal. So when your customers use a Visa or MasterCard to make a card payment, an acquirer charges a combined credit card MSF or merchant service fee. And this fee is based on volume and the value per card type, and is typically charged as a percentage. So as you can see on the screens, we've got there the interchange fees, card scheme and account fees, and all those things are bundled up to form your merchant service fee. Now, card scheme fees are typically paid by individual acquirers, paid to individual acquirers from the card schemes to encourage use on those networks. This particular issue is extremely important, as it has a huge impact on Australian and global travel agencies. Some travel agencies have experienced difficulty in finding an acquirer, and that is trying to find a financial institution that will provide their business a merchant terminal. While reasons vary, the primary reason is FDR, or forward delivery risk. So let's have a quick look at what FDR for a burger shop might actually look like. Customer comes into the shop, places an order for a burger. They tap and go, and that order is then sent to the back of the house kitchen, and the burger is made. The forward delivery risk for a normal retail environment is the time from when the tap and go is put on the terminal, and the burger and shake is delivered to the customer at the bench. So let's say a maximum time limit there might be 5 minutes. But let's go something a little bit more complicated. Let's say that you've gone to an Australian online retailer such as Iconic. You purchase a dress or a shirt, and the retailer says that the goods will be sent to you within 20 days. Now, if the goods are not delivered to you, as the customer can invoke a chargeback on that purchase. The reason why you can invoke a chargeback over that period is because the card schemes have set the rules up saying that if you use your credit card, you get a certain level of protection if those goods are not received. Now, if the goods are not delivered, the financial institution that you secured your card, so the card issuer, will then reach out to the merchant or the acquirer and say, this good has not been received, and in most cases it's an automatic deduction from your account. So you won't have any oversight of it, but the customer gets their money back within 90 days in most instances, and you as the merchant have to wear that. Now, there is a slightly different take on this as a travel agent, which I'm not going to go into now, but that is the principle of FDR, is that it's the time it takes when someone has purchased a goods to when it is received. So this is a leisure example of FDR, and the reason why I picked a leisure example is because it provides a really good overview of how this happens. So travel agents have the third largest exposure to FDR in Australia, and that's behind the insurance sector and education. And if you think about that for a second, you buy your insurance product 12 months in advance, if you do, and you pay a lump sum. And that lump sum covers you for the entire year. Now, if that insurance organisation goes broke, you can actually charge back for the amount of time of the year that they did not provide you cover. So that's why they have the largest, followed by education, and we're the third. So let's use this typical example here. Leisure traveller, most leisure travellers to visit your shop and purchase a holiday around about 70 to 100 days in advance of their travel. And that means you, as the travel agent, a forward payment to the end suppliers, typically within a 14-day settlement cycle. You pay the airline, the resort, and the sightseeing tour. If a customer pays using a card with chargeback rights, you as the travel agent are liable if one of these suppliers, such as Doors, goes broke in this pre-booking period. Now, this is quite a significant amount of money because the liability for Australian travel agencies at any given time is $5.4 billion. And that's a liability that the acquirers share between them, and you as the merchant are also liable for. So you can see that for travel agents, FDR is significantly different to that of the typical retail business. But as I mentioned earlier, I'll go into much more detail about this and what AFTA is doing in this space to make this less of an issue for travel agents in the future. So the main question I've been asked over the last couple of weeks and months is, why is the system changing? So the Financial Systems Inquiry, or the FSI, or you may have heard it referred to as the Murray Review, recommended substantial changes to the financial systems in Australia. The inquiry looked at the way superannuation was managed, innovation growth strategies, and also had a look at the way consumer law could be updated to better protect consumers and businesses. Of all of the issues facing the financial services sector in Australia, the one that received 5,000 of the 6,500 submissions was regarding excessive surcharging. Now, it must be said here that the overwhelming majority of these submissions were focused on complaints about the taxi and airline industries. The government agreed that there was a problem economy-wide and commenced the process through the Reserve Bank of Australia to find solutions to the issues and, importantly, develop new standards or regulations that govern the way electronic payments and surcharging is conducted in Australia. I'm pleased to say that AFTA has been heavily involved with this review since its inception, and we've been regularly engaging with the RBA and the ACCC to ensure issues such as FDR were centrally considered by the regulators. So I'm going to touch on interchange fees here, just because they make up the primary costs of your MSF. Okay, there was a large increase, the RBA did find there was a large increase in the number of interchange categories since the last review in 2007. And just to highlight this, in 2007 Visa had 5 interchange categories, and as of last year they had 27. And for MasterCard they had 3 in 2007 and 19 last year. So an exponential growth in the number of interchange categories, and therefore the costs that it was costing you as a merchant to process card payments. The RBA found that smaller merchants were charged higher interchange fees, while the larger merchants who sold a higher volume of goods or services were provided strategic merchant rates which were significantly lower. This was because the individual card schemes were using the 3-year review of interchange rates to establish its average. The card schemes needed to make sure that the interchange rates complied with an average of 0.5%, and it was assessed every 3 years, which means they could use people with high volume businesses to offset higher rates in low volume businesses, and then importantly provide more services to the customer, and the customer appeared to get something for nothing. So what has changed? The new regulations have provided a cap. So under the old regulations, you may know that if someone paid by a corporate credit card, your merchant service fee could be anywhere from 3%, and for those using normal cards, those rates could vary from 0.1% to 2%. Importantly, and this is a really good change by the RBA for small and medium-sized businesses, is that interchange rates are now being assessed every 3 months, and they are being assessed that they must meet an average of 0.5%. So what this means is that there will be a gradual decrease in what your merchant service fee looks like. So let's just recap this really quickly. Interchange fees are capped and they'll be assessed more regularly. The cost to you as a merchant should be reduced by the 1st of June 2017, so the 1st of June next year, because the card schemes and acquirers have been given 12 months to review and change their processes. Customers who use their cards for reward points will most likely see a reduction in the number of points that they earn, and the RBA also believes that the annual fees charged to consumers will be increased over this period. So what's changed in the surcharging space? The good news is you can still apply a surcharge. And in our sector, where it's industry practice to do so, due to the tight margins, this is really important. AFTA fought really hard to ensure these arrangements would continue, and the RBA has agreed that merchants across the economy-wide can continue to their surcharge if they choose to do so. So, top overview of where we are at, you can still apply a surcharge, but it should only be the amount it costs you as the merchant. I'll explain this in more detail later in the presentation. Secondly, and this is the most important point, very, very important, you can no longer blend your costs across card schemes. So just a reminder, card schemes, Visa and MasterCard, American Express, China Union Pay, etc. It's common practice in all Australian retail outlets, including travel agents, to have one surcharge rate, say for MasterCard and Visa, and another for Amex. And these are the 3 primary cards used in the Australian economy. In the new standards, you'll need to have a separate rate for each card scheme and card type your business accepts. So this means you must have a surcharge rate for MasterCard debit, MasterCard credit, Visa debit, Visa credit, and American Express, which again I will touch on in more detail due to the complexity of the issue. Now, I do note that it isn't industry practice to currently surcharge for debit payments, but you can do so under these regulations. So you may choose to only have a surcharge rate for MasterCard and Visa credit and American Express, but there's a number of different things which we'll touch on in the second part of this presentation about why you may choose to include debit as in a surcharge, or apply a surcharge to debit and prepaid payments. The RBA has also clearly identified the 5 permissible items you can include in your surcharge. So for those of you that were setting surcharges before, you may have been aware that the RBA had a very broad and a very loose definition of what a merchant can include in their surcharge. And that has been completely scrapped and has been very tightened and very prescriptive in the new regulations of what you can include in your surcharge. So a payment surcharge, as defined by the RBA, applies to particular types of cards that the merchant is accepting. It's not a service fee, which you as a travel agent may charge for your services. It's a direct surcharge that a consumer is charged when they choose to pay using a card. So what the individual acquirers have to do over the next 12 months and have this ready by the 1st of June next year is that they have to develop an annual statement. And on that annual statement, they have to detail the merchant service fees, terminal rental and servicing, and gateway fees. And all of those things are very important because merchant service fees is the fee that the bank charges to accept a payment by credit and debit cards. Terminal renting is the fee the bank charges you to rent the merchant facility, both in a physical and online environment. And the gateway fees are the switching fees. And again, that's another fee put involved that allows the transfer of information and therefore money across accounts across the world. The other two costs, which have been clearly defined and probably won't be provided by your acquirer, are fraud prevention services and the cost of FDR insurance. So for fraud prevention services, these are costs associated with managing the risks and occurrences of fraud. And for FDR, businesses can include utilising an insurance product or an insurance policy or similar product. Only those costs can be included in your surcharge. All other costs need to be provided, and importantly, very important again, all of these services have to be provided by an external provider. No internal costs can be included in the surcharge that you charge a consumer for using this particular payment type. And I want to quote something directly here from the RBA because I found it very interesting, because the RBA has said your acquirer must provide each business with an easy to understand statement which clearly describes the permissible surcharge rate. Now, what is easy to understand, but we are definitely following this up very, very, very closely with the RBA and the ACCC to make sure that these statements are easy to understand and they aren't 50 pages long, so you as a travel agent should hopefully receive a 1 or 2 page annual statement from your acquirer saying these are the costs involved, this is what we believe the merchant's permissible surcharge is. So the other thing I just want to mention here is that for the external providers, fraud prevention services and the cost of insurance or other products are done by an external provider, and you need to find an independent provider to deliver those services. Now, AFTA is working very closely with a number of different providers on this front, and as more information comes available over the next 12 months, we'll be continuing to update our membership database. Well, let's go through what type of information might be available on your annual statement. Your annual statement will clearly articulate the number of transactions you are doing on each card scheme and card type. It will also detail the average cost to you as a merchant to accept each of the card types. So you'll be given your number of transactions, the volume for Visa credit and debit, MasterCard credit and debit, and you'll also now be given an overview of Companion Amex. Now, at this point, I just want to point out what a Companion Amex card is, because some people on the call may not be aware of what that is. A Companion Amex card is an Amex card that has been provided to your customer, typically from their bank. You'd be able to identify this in most cases because the Amex card on the top right-hand corner would have the logo of that financial institution. If you think about your own situation here, most people on this call will have a mortgage, and a number of items provided with your mortgage is a line of credit for a credit card. Most people would have been offered a MasterCard with a secondary Amex card attached to the same line of credit. Now, the RBA has ruled that that particular card type now has to be regulated, and will include the fees. Is included in the fees that you're charged as a merchant. So you won't have to negotiate independently on the cost of Amex Companion, and we're still working through exactly what that'll look like in practice for agents. Again, bear in mind these changes are being phased in over a 12-month period. Now, the fees at the bottom of the slide there are the fees that will also be presented, but will most likely be presented as a fixed cost. There's a fixed cost, so you'll be able to see what they are, but then will be included in what your acquirer tells you what you can include in your surcharge. Just reading a question on there. So internal costs, an example of some internal costs there that might come through. Let's say that you've got an account fee that your accountant charges you for processing the books. You can't actually include your accountant's fees in your surcharge for acceptance of credit card payments. You can include that in your service fee if you choose to have one, but you can't say, right, I've got my accountant costs me $500 every year, and therefore I'm going to divide that over all my credit card transactions and include that in your surcharge. So other internal costs could be cost of insurance, cost of payroll, any of those normal business costs which are part of running a business. And really, if you think about it, it's any cost that would be apparent in your business that would still be there if you didn't accept credit or debit card payments. Now, I also just want to mention a little bit more about Amex at this point. Now, if you have an arrangement with American Express and you accept the proprietary cards, is what they call them, so you may know them as the green or the gold, and if you're really lucky, black Amex. And these are traditional Amex cards. They are not regulated by the RBA, and you'll still need to negotiate with American Express, the corporation, on the merchant fees on that matter. So, fraud prevention. I don't think this will actually be a major issue for a lot of bricks and mortar agencies on the call today, but I will just run through exactly what fraud prevention is. Some online businesses have a substantial risk of fraudulent transactions. This is because unlike bricks and mortar agencies, where you physically see the person, you interact with their customer, in most occasions you would have checked their passport to ensure their name is the same as what's on their ticket. And you may have also seen other forms of identification, such as driver's license. Online businesses need to rely on other checks to make sure they're dealing with the person they say they're dealing with. So therefore, online security programs and security specialist services are available and able to be included in the surcharge rate. So the most common form of security arrangement you may see could be the I'm not a robot button, so you push that button before you can process payment, or those really annoying, difficult to read and understand images where you've got to pick the numbers and the letters, type them into a box to confirm that you actually are a person. All of those types of things will be included as a permissible surcharge rate because they're directly relevant to the cost of accepting an electronic payment. Now, I just want to emphasise this again, and I will be emphasising this through the webinar. It's really important that if you do have a fraud prevention product or service and you want to include it in your surcharge, you need to do so using an external provider. If you have an internal cost, that can't be included. So one of the questions we got from the last webinar was they had purchased a fraud prevention policy against travel agent or employee fraud. Now, that is not allowed to be included in your payment surcharge because that applies to your entire business, not just electronic payments. So again, that little bit of distinction there. I know some people do have on the call today, you do have your own insurance products to manage any employee theft or any of those arrangements. That is not allowed to be included. So yes, it is fraud, but it's not fraud under this definition. Okay, so I did say I'd touch back on the costs of insurance for FDR, and importantly, the RBA have announced specifically that insurance and similar products for FDR coverage will be and is a direct cost of acceptance of credit and debit payments, and therefore will be allowed to be included in your surcharge. This is because there is a risk for merchant that only occurs when a customer chooses to pay using a credit or debit card. Now, you may remember earlier this was a major reason why a number of travel agencies had difficulties in the past getting access to a merchant terminal. And you can see why this particular diagram really details why it becomes an issue. So you as the agent accept payment from the customer, you process payment to all the end suppliers, and you've done everything right. And all of a sudden the tour company that you'd booked with goes bankrupt, and there's absolutely no fault of yours, but the consumer invokes a chargeback on their credit card, and you, as the travel agent, are left holding the baby of the bathwater in the bath. You've done everything correct, and someone's closed, and you're left out of pocket even though you've done everything correct. So look, at AFTA here we're working really closely at the moment with all the acquirers and all of the card issuers to work out what a solution to this problem might be. Chargeback rights will continue for a long time to come, but we are working on something, and we're hopeful that over the next couple of months we'll be able to announce quite an exciting product that will be coming to the Australian market. We're making sure that it's at a good price point and to make sure that people can afford it and it becomes part of that surcharge. So we've spoken about those 5 different items in some detail now, and what I really want to do now is just give you a quick run through on how you're going to work out your new surcharge. And we're coming to the end of the presentation at the moment, so thanks for hanging in there. We're going well here at the moment. So to work out your new surcharge, you're going to need your annual statement. You're going to need receipts from your service providers for any electronic fraud prevention or FDR insurance or similar products. So let's have a quick look at a highly stylized annual statement that your acquirer may give you. Now, also want to point out here, this is 100% hypothetical. There are no basis for these merchant service fees. I've picked these purely to demonstrate what this might look like. So your annual statement there provides the card scheme, card type, number of transactions, and what the merchant service fee is as a percentage for that. So you can see there, MasterCard credit, MasterCard debit, Visa credit, Visa debit, and American Express or Amex companion credit. Gives you the number of transactions and what it costs you as a merchant. Now you'll see down the bottom that American Express may also give you an annual statement, and they must give you an annual statement as an acquirer, but you'll see there that there is no card scheme. There's just card type, number of transactions, and your merchant service fee. And that is because American Express is the card scheme and they only work in digital, so they only work in credit markets. So here's an example of hypothetical, and again, I emphasise the hypothetical, so I definitely don't want anybody saying, I saw a webinar from AFTA and the cost of fraud prevention services was $3,000 and an FDR insurance product was $2,500. Definitely don't want you to think that that is the case. These are hypothetical, and I really want to emphasise hypothetical. There is no basis from this. They're picked from the great blue sky. So it's important you make sure it's got an ABN, make sure the service is described on that receipt, your coverage period, and what it costs. So you can see there in this hypothetical example that the additional permitted cost is $5,500 on top of what's on your annual statement. So then how do you work out how this would all work? So total fraud permitted costs divided by total value of the card schemes times 100 will give you your percentages, and the same for FDR. Now these slides will be available online, so I'm going to go through this relatively quickly. So the cost of fraud, the fraud prevention services was $3,000 divided by your $1 million worth of card schemes times 100 gives you an additional permissible surcharge rate of 0.3%, and for FDR it's 0.25%. Now again, remember these figures are hypothetical, they're not based in any true factual information. So then how do you develop your single surcharge rate? So your MSF plus your fraud prevention plus your FDR insurance will equal your new surcharge rate. So let's do this with the example we had before. So the example for MasterCard credit, your MSF was 1.1% plus your fraud prevention at 0.3% plus your FDR insurance or similar products at 0.25%. And that means your overall surcharge rate will be 1.65%. And you'd need to continue that across all your card types and card schemes. So again, you'll have one for MasterCard debit, one for MasterCard credit, one for Visa debit, one for credit, Visa credit, one for American Express companion, and one for your proprietary American Express. Now, a really important fact here is that if you do choose to surcharge, the RBA has said in their regulations that it has to be a percentage-based system. So if you do wish to charge a fixed cost like the airlines, and I do know that a number of travel agencies around Australia have through our research, you need to work out what the percentage is first, and then how you would apply that, how you apply a single rate across the entire network. Okay, so why is this important? Again, this to me is probably the most telling slide that there is. These are the penalties that the ACCC can charge you if you do the wrong thing. So let's say that you incorrectly work out your surcharge, or you over-surcharge someone by 0.1%. So you have 100 customers come in, you realise that you over-surcharged 100 customers by 0.1%. Worst case scenario from the ACCC. is if you're an ASX listed company, it's $108,000 times 100 occurrences. If you're a non-listed company, it's 100 times $10,800. So you can see the fines that are attached here under consumer law are extremely harsh, and there is another level if they think that you've purposely done the wrong thing. These are things if you accidentally make a mistake. So again, very important you get this right, and one of the reasons why I've gone into a lot of detail in today's webinar. So when will these changes be implemented? For large businesses, which I'm going to go through the definition in a minute about what a large business is, all of these changes have to be updated by the 1st of September 2016. And that is all the large businesses that we're aware of through your ATAS applications, Jason has written to personally, and I've been in discussions with a number of those businesses to make sure that you're aware of the changes and what you need to comply with. For everybody else, your acquirer will provide you your definition, your annual statement on the 1st of June 2017. New interchange rates will come into effect, which means you should hopefully see a lower merchant service fee, and you'll need to comply with the new surcharging regulation from the 1st of September 2017. Now, the days of setting your surcharging rate and forgetting about it and leaving it forever are no more. You need to review this yearly from the information provided from your acquirer. So I just want to touch on now exactly how a business will be classified and who has to comply with these items before the 1st of September. So if your business has a revenue of $25 million or more, and revenue is defined there on the screen, or your business has a gross assets of more than $12.5 million, or your business has more than 50 employees, you have to comply with these guidelines, or by these new regulations, by the 1st of September. So the ACCC and the RBA have determined that those that are large businesses have the skill sets available to adjust their surcharging rates automatically because they had that skill set on board. For those that are small and medium, the RBA and ACCC have determined that there needs to be a 12-month lead process. Now, I just want to point out here that we've been in heated discussions with the ACCC and the RBA on this matter. Now, originally when they announced this, and for those of you that have watched the webinar that is on YouTube, we originally said in our correspondence that it was $25 million turnover, which would take into account many small and medium-sized travel agencies around Australia. So the ACCC have determined that for AFTA members and for those that are acting as agents for end suppliers, revenue is defined only as the money that your business derives from the provisions of these services. So your commission fees and your service fees, and that's a really important win there. So look, I'm getting a lot of questions coming through at the moment. I'll cover a lot of those questions in the next part. So where are we now? Where can you find further information? We've developed a lot of support material. It's all available from afta.com.au. It's on the home page. I update that personally whenever new information comes available from the meetings we're having with the ACCC. There's some really good Q&As on the RBA website. Bear in mind they are written by the RBA, so they're written for financial people. They've tried their best to put them in plain English, as have the ACCC, but bear in mind there is some technical aspects on there. And importantly, if you have further questions about your individual circumstances, I recommend you contact your bank and acquirer, and they'll be able to provide you some additional information. So that's the end. I see we've got a number of questions. I'm just going to grab a quick drink of water and throw to Joe just to help with the questions.
Okay, let's just have a look at some of these questions. So Dean, we do have one question which relates to surcharges on Amex. They're just asking if they can change normal surcharges on Amex supplied credit cards.
So yes, you can definitely change your individual rates with American Express, and they're those proprietary cards, so they're the ones that don't have the bank brand. The The RBA has announced that I do know that there was a number of clauses in American Express contracts which said you had to have parity of surcharging. The regulations clearly prohibit that now, so you can charge whatever surcharge you feel is necessary for American Express proprietary cards. So they're the green, the gold, black, any of those ones that aren't bank issued American Express cards.
Just having a look, we've got a question about providing some examples of internal costs and what they might be.
Perfect. So I did touch on that one just slightly through the webinar, and as I said, so any of the costs which aren't directly associated with electronic payments. So if you had, as I mentioned, if you've got a fraud protection policy against employee fraud, that's not a permissible cost within your surcharge. You need to make sure that you can include it in your service fee, but anything included in your surcharge needs to be directly related to the processing of an electronic payment.
And here's another question, just talking about difference between cards. So Dean, can we differentiate between Amex companion cards issued by the bank and Amex proprietary cards as both are charged at the same rate?
So that's a really, really good question, and to be honest, that is still being worked through. So one of the things that we do know is that instant recognition of a card isn't able to be pushed through on the current network. So in a physical environment, yes, you'll be able to tell, because a companion card will have the logo of your bank, or the customer's bank, sorry. And the American Express proprietary card won't have that, and they've got their own branding on those cards. On an online environment, it's going to be extremely difficult to work that out. We're still working with the ACCC and RBA on how that's going to be enforced. My recommendation is for those merchants that have predominantly online business would be to charge a surcharge rate, if you do choose to do so, charge a surcharge rate that meets the regulated cost, not the proprietary cost. So you may lose a little bit there, but at the moment the system isn't built to have instant recognition of cards.
We just have a question regarding currency exchange fees. Dean, what's the best way to find information out about that? Okay,
so if you're talking about currency exchange fees electronically, so that means if someone wants to come in and, so for example, internationally, when you go to purchase a good using your Australian card, you can insert your card into the terminal and you can select to pay in Australian dollars or US dollars, for example. Now, currently there's no outlet in Australia that provides those services. If you're talking about what it's going to cost a consumer or yourself to gain access to currency from a bank or from Western Union or from a currency exchange outlet, that falls outside of these regulations, and it's fair game to do whatever they wish to do. However, if you did use a credit card and the financial exchange institution wanted to charge you a surcharge for using that credit card, they must comply with these changes.
Thanks, Dean. We've just had a question asking you to please explain the Amex clarification again. Before you're talking specifically about Amex.
Okay. So with American Express, American Express and Diners is the most complicated electronic payment form in Australia at the moment with these regulations. Now, I'll just go through what an American Express companion card is again. So that is a card issued from a customer's bank. So typically, what a companion card is that you'll get a MasterCard and an American Express card on the same line of credit from your bank. And the bank will have that have the logo on the top right of the card, and that is called an American Express companion card. So they are regulated. An American Express proprietary card is a card which has nothing to do with the bank, has nothing to do with MasterCard, has nothing to do with Visa. It's a card directly issued from American Express, the corporation. So the most common American Express card, picture of American Express card, is the green charge card, which you'd be aware of. And so that's the fundamental difference there. In relation to surcharging, because companion cards are now regulated by the RBA, they will have a lower cost of acceptance. The RBA thinks this will be the case. Will have a lower cost of acceptance to those cards which are American Express proprietary. So when you're setting your surcharge rate, if you're doing online bookings only, I would thoroughly recommend you pick the lowest surcharge rate so you don't breach the laws.
Great, thanks, Dean. I've just got a question here. If our business buy at net cost from suppliers and mark up and package holidays, what would be our turnover for large or small company classification purposes?
Yeah, look, a fantastic question. The definition is the consolidated business, so all entities that your business controls and owns. So I'll use one that that I know that everyone would know about. So a number of the larger travel agencies in Australia. So let's use Flight Centre for example. So they've got Flight Centre, and in the corporate space they've got FCM. Now, for the definition of what is a large business, you can't just take the turnover of the Flight Centre brand. You need to take the turnover of all brands and all entities that are controlled by that single entity. So FCM would be included within that. You can't just pick and choose what parts of your business would be large and small.
Thanks, Dean. We now have a question about whether or not you can charge the extra interchange fee when the business doesn't have the client card to swipe. A higher fee applies from the bank in that instance, so can you charge more?
Yep, okay, again a really good question there. Now with that example, now in a cardless environment it does become really difficult for the merchant. I 100% agree. We're working on things to try and make it automatically recognise at the point of swipe. But what you must do is that when you enter that in, so if you're manually entering that in, your terminal should be clever enough to work out whether it is a Visa or MasterCard. So that's automatically done. It will also be able to identify if it's an American Express card. You'll be given an average from your acquirer on that annual statement. So your annual statement will say that you did 500 transactions on Visa credit last year, and you turned over $1 million of that, and therefore the, for example, means that you can charge a 0.5% surcharge or a 1% surcharge, whatever that might be for MasterCard credit. You won't be able to go, oh well look, this is a platinum Visa card and therefore I want to charge at this rate. No one in Australia will have that ability. But also bear in mind, if we just touch on those interchange rates again, is that as of 1 June next year, all of the interchange fees are capped. So the days where someone would pay with a Visa Platinum card and you would get charged 3%, for example, a merchant service fee of 3%, those days are pretty much finished because the interchange cap is capped at 0.8%. So what the RBA is hoping is that by capping the interchange rate, is that will have a overall downward shift on what it costs merchants to accept credit and debit payments.
So we have a question here, whether or not the criteria for small business when applying to an Australian consolidated entity, sorry, let me repeat, does the criteria of a small business apply to an Australian consolidated entity? So if you're part of a global group, does the criteria apply to the highest level entity globally? Again,
a really good question. We've had several good questions today, so it's great to see. Now, my understanding of the ASIC guidelines is that it's a consolidated entity. So yes, if you were an international entity, you should look at what group you're part of. You can't pick and choose. Now, I'm more than happy to, it does look like that's a particular question for particular types of business. I'm more than happy to take that offline. The ACCC are also very happy to meet and discuss with different businesses that have complex businesses to work out whether they'd be classified as large and small. and they'd much rather that than people not try and comply with those arrangements. But look, on first run past that, if you're part of a larger business, so let's say, for example, let's use Carnival Cruise Lines as an example there. They're part of Carnival Cruise Lines International, therefore their business would be considered a large business under these guidelines, to the best of my read. But again, happy if you want to send me a quick email at the end of this webinar, and we can set up a quick meeting with the ACCC to ask those questions, or I can ask that question independently with some specific information from you if you did not want to talk to the ACCC directly.
Thanks, Dean. I really like this question. Do you legally have to show the credit card fee to the client if the client pays by credit card, or can you simply bill the fee in booking fee?
Yeah, that's a ripper question. That's really good, because that's looking at what the consumer is going to be looking at. You don't actually have to provide how you established your surcharge rate to anybody outside of the ACCC, and I also believe, and the RBA will never request it from you, but the ACCC might. So the ACCC is the only authority in the land that can say, I want to see exactly how you establish your surcharge rate. Now, you may choose to, if you want to show your customer, look, this is what it costs us to accept this card payment, and you wanted to do that, by all means, go ahead. But you don't have to. No, definitely not. But what you've got to make sure you do is just have whatever surcharge rate that you have established. You've got that documented, and you can demonstrate that to the ACCC. So if you want to see a recent example of how that works in practice, Qantas recently announced their new surcharge rates. I do believe they did a mass communication out to all agents that are sellers of Qantas material, and if anybody didn't get that, I'm happy to facilitate that. They have a surcharge rate of 1.3% coming online. So they haven't provided, what their merchant rates are, or what their fraud costs are, or what their FDR costs are. They haven't provided any of that, nor do they have to.
Sorry, Dean, we just have a question. I think the line broke up a little bit. Can you just stipulate whether you can build into the service, your service fee the covering of the credit card surcharge? You don't actually have to split it up. Can you just clarify that?
Yeah, okay. That's a really tricky question. Can definitely see what you're trying to do there. Now, if you don't wish to charge a credit card surcharge, that's fine. You don't have to. There's no regulations which say you have to charge a credit card surcharge. If you want to charge a different service fee for different payment types. So let's say, for example, you say, I'm happy to book your travel, but the service fee that I'm going to charge you to book travel is $100. Just picking that number out of the air. But then you get to the end of the transaction and you say, oh yes, you want to pay by credit card, that service fee is 110. But if you pay by cash, it's 100, that's illegal. But if at the end of the transaction, if you say at the beginning, we don't have any credit card fees here, or any credit card surcharging, but there is a service fee of $100, and that $100 is for cash, debit, prepaid, credit, that's fine. You can put whatever you want within that service fee. But you can't have a separate service fee for a different payment type.
Right, okay, that's interesting. So we have a question, so from July 2017, the bank charges will be 8% for all credit cards except Amex. So does that mean a travel agent or a business can only charge the customer the 8%?
Okay, so I just want to clarify something here. So the RBA has capped the interchange rate at 0.8%, but acquirers and card issuers must ensure the interchange fee equals, on average, 0.5%. So they can't charge anything above 0.8% in regards to the interchange rate, but they have to have it at a 0.5% average. So your merchant service fee will be more than 0.5% or 0.8%, because if you remember on a previous slide, I listed down the bottom there was a number of other fees that the bank will charge you, such as terminal rental, line rental, switching fees, those little fees which sat down the bottom of that slide, which will be online shortly. So it will be higher than the interchange rate. While the interchange rate is the majority of your service fee, or your merchant service fee, it's not the only cost. And that was one of the things that was really poorly explained by the government when they announced these changes. They announced that it was only going to be 0.5% to accept a credit card payment. That's not the case. You're allowed to surcharge what it costs you, and it will be higher than 0.5 or 0.8% due to those other costs.
And I think we've got time for just one more question. So with the FDR, can we build in the cost of the end supplier insurances that a business already has in place? So prorated to just credit card payments?
Really good question. That one is a very good question, because I've been having that very discussion with the ACCC and the RBA about how those things work. Now, if you have an end supplier failure insurance policy, you aren't allowed to include that in your payment surcharge. And again, it goes back to my original statement that if you took your merchant terminal out of your business and stopped accepting payments electronically, so you stopped accepting credit and cash payments, would you still have that insurance product for end supplier failure? If the answer is yes, and it's 100% because of that, then it's not allowed to be included in your surcharge, because it's a cost of doing business. Well, the RBA has determined that it's a cost of doing business. So it can be included in your service fee, but it's not allowed to be included in your surcharge rate. But again, it's a good question. I know there's not a large number of people, a large number of travel agencies that have that level of insurance. More than happy to take that question offline and have a chat about your particular case in more detail so we can work out how that all works.
All right, due to time we need to wrap it up there. The system does record the questions and who asked them, so we'll be able to come back to those that ask some quite detailed questions and just connect with you. But of course, if you've had any unanswered questions or need anything clarified, please feel free to reach out to Dean. I think I'll just pull up his details there. So you can see Dean's email address. Please feel free to call or email, and of course he'll be able to answer those questions. We really thank you for your time this morning. The webinar recording will be online by tomorrow, so that you can jump on, re-watch it at your leisure, and you'll be able to download a copy of the presentation slides as well. Thank you once again. Our webinar series with Google will start in September, and so we look forward to having you along to that and learning about the digital space and how you can best promote your business when and where consumers are researching for travel online. Thanks so much for your time.